Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hiding in plain sight within company filings. Today, we're diving into a bit of a shake-up at Roman DBDR Acquisition Corp. Thurn. Get ready because there is a new CFO in town and some interesting financial tidbits that might just be worth a second look. Before we jump in, if you're new here, make sure you hit that subscribe button. And don't forget, we have a super active Discord community linked in the description below where we break down these filings even further. So, what is the big news? It looks like Roman DBDR Acquisition Corp, the fuck, or DRDB as it is known by its ticker symbol, has had a leadership change at the very top of its finance department. On the 30th of September of last year, the Chief Financial Officer, John C. Small, stepped down. Just one day later, on the 1st of October, the company brought in a new captain for its financial ship, John J. Birmingham. Hez not just the new CFO, but he'll also be handling the roles of Principal Accounting Officer and Principal Financial Officer. This kind of immediate transition implies a need for a swift change, and it is always worth looking at why these moves happen, especially when a new person steps into such critical roles. Now, who is this new CFO? Mr. Birmingham is 52 years old and comes with a solid background. He was most recently the Vice President of Internal Audit at Carrier Corporation, an energy solutions company, from July 2021 to March 2025. Before that, he held significant roles at Roper Technologies, a diversified technology company, where he served as Vice President and Chief Compliance Officer, and also as Vice President of Internal Audit from 2007, all the way up to July 2021. He also spent time at Protiviti Inc., a consulting firm, and started his career at Arthur Andersen, a big name in accounting, has a certified public accountant, which is always a good sign for a CFO, and he has a strong educational foundation in accounting. This kind of experience suggests a focus on financial controls and regulatory compliance, which are absolutely vital for any publicly traded company. Naturally, any new executive appointment comes with a compensation package. For Mr. Birmingham, it looks like he's receiving a one-time initial payment of $25,000. On top of that, there is a subsequent payment of $50,000 related to the company's securities and exchange commission reporting duties. The filing also mentions such additional amounts as may be agreed upon by the parties, so his total compensation could be more. This structure, tying part of the payment to SEC reporting, is quite specific and hints at the busy work ahead in managing the company's financial disclosures. It's also important to note that there are no reported family ties between Mr. Birmingham and existing leadership, and no reportable transactions has had with the company in the past under specific regulations. This simply means his appointment is based on his qualifications and the company's needs, not any pre-existing personal connections. Now, let's peek at what the company actually does. Roman DBDR Acquisition Corp. The SU is a special kind of company, often called a SPAC, or a special purpose acquisition company. These companies are essentially shells created to raise money through an IPO to acquire an existing private company. Their trading symbols are DARDBU for units, DARDB for Class A ordinary shares, and DARDBW for warrants. All of these are traded on the Nasdaq stock market, LLC. It is crucial to remember that SPACs are designed for acquisition, so their financial story is often about preparing for that future business combination, rather than showcasing ongoing operational revenues from a traditional business. The units themselves are interesting. They consist of one Class A ordinary share and one half of a redeemable warrant. This structure means that investors are buying a package deal, and the warrants give them the right to buy more shares at a set price later on. Speaking of warrants, these are a key component. Each whole warrant can be exercised to buy one Class A ordinary share for an exercise price of $11.5 per S-share. This is a critical detail for anyone holding or considering these warrants. The value and attractiveness of these warrants depend heavily on whether the company's stock price rises significantly above $11.5. The filing also specifies the currency used, which is the US dollar or ISO 4217 USD. And the unit of measurement for many financial items is shares, as indicated by XB Bali shares. Roman DBDR Acquisition Corp, the FECN, is identified as an emerging growth company, which allows them certain flexibilities in financial reporting, including the option to delay adopting new accounting standards. This is common for newer companies as they find their footing. They have elected not to use the extended transition period for complying with new or revised financial accounting standards. This entire report, categorized under Item 5.02, is primarily about these changes in officers and their associated financial arrangements. It's not detailing operational performance in the traditional sense, but rather the administrative and financial scaffolding that supports the company's future endeavors. Now, here's where we apply our Warren Buffett style lens. While this filing is tier deep dive into income statements or balance sheets of an operating business, it's all about the mechanics and the people steering the ship. The appointment of Mr. Birmingham as CFO is a significant event for any company, especially a SPAC. His background in internal audit and compliance suggests a strong focus on financial integrity and adherence to regulations as the company navigates its path towards a business combination. For investors, this signals a commitment to robust financial governance. The compensation structure, with the cash payments tied to SEC reporting, emphasizes the administrative heavy lifting required for these types of companies. It highlights that a substantial part of a SPAC, S operations, involves managing disclosures and regulatory requirements. The nature of the company as a SPAC means its financial health isn't measured by profits from selling products or services, but by its ability to manage its capital, identify a suitable acquisition target, and execute that transaction successfully. The warrants with their $11.5 exercise price represent potential future dilution and capital infusion for the company, depending on market conditions and the success of the acquisition. Looking at the broader picture, the key risk for any SPAC is the successful completion of a business combination. If they don't find a suitable target and merge within their timeframe, the company could be dissolved and investors might get some of their initial investment back, but often with losses. Mr. Birmingham's role will be crucial in ensuring the financial due diligence and reporting are impeccable throughout this process. In conclusion, the story here is one of leadership transition and preparedness. Roman DBDR Acquisition Corp. A second is making sure it has the right financial leadership in place to handle its obligations and pursue its acquisition goals. The appointment of a seasoned CFO with a compliance background is a positive sign for financial rigor. The main opportunity lies in their ability to execute a successful merger, and the significant risk is failing to do so within the allotted time. Alright, that is our breakdown of Roman DBDR Acquisition Corp. 2's latest filing. What is your take on this leadership change and what it might mean for the company S future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord link in the description. Thanks for watching. See you next time.